Okay, what is going on, CYPRX Advanced YouTubers? Welcome back to the CYPRX YouTube page. As always, if you're interested in learning about cryptocurrencies, commodities, indices, foreign exchange, please go ahead and consider subscribing to the YouTube channel. In today's video breakdown, we're going to cover XRP as well as HBAR's price action. I'm going to also go over some interesting tweets that I put out to you all on my personal Twitter. All right, and then we're also going to talk about a video that I uploaded to you guys on, I believe it was March 24th. Yep, right here, XRP, HBAR. Are your crypto bags packed? March 24th that I published for you all. And I told you guys that I was going to be dollar cost averaging into XRP as well as HBAR because there was going to be a bullish pump coming in the near future. And as you guys can see from XRP's current price, we are sitting at around 89 cents. And as well as HBAR had a nice decent rally as well from when we were displaying that we were going to dollar cost average on the CYPRX YouTube. And we ran all the way from around 20 to 21 cents to now 24.5 cents. Okay, so if you guys are interested in following me on Twitter, I'm not going to ask that anybody follow me on Twitter. You guys can go ahead and do so if you please. All right, here is my Twitter account, Cypress Demanicore at C Demanicore. This is my only Twitter account, and right now, currently the only social media that I actively have. Any other social media accounts are imposters, but you guys can click on the main website here. It is a 10.6K followers Twitter. All right, again, so if any other Twitters or Instagrams or whatever the case may be pop up, make sure that you guys block them. But I tweet out funny stuff here as well. But if you guys can scroll down to the Twitter on March 26th, I had tweeted out a technical analysis screenshot of XRP, and I just thought that it was significant because I want you all to see how price played out from when I sent that screenshot. I was very specific about what it is that I said to Twitter and gave you guys sort of a signal. Okay, so here's that right here. Here's that screenshot. And I said, trendline liquidity grab, then popcorn. Realistic target $1 by end of April. Fingers crossed. Okay. And I showed this, potential trendline liquidity here, move to the downside where the market makers would grab liquidity and then send price higher to come and attack those equal highs that we've been mentioning for quite some time. All right. And I want you all to look at what price action did on XRP. Okay. So since I released that tweet on March 26th, look at this accuracy. Okay. Look at the trendline liquidity here. And what it is that I teach you guys on the YouTube channel, just to go into an extreme detailistic viewpoint of what the market makers are doing on a consistent basis. We see trendline liquidity here. We see New York session buys and an expansion higher, higher high, higher low formation, expansion buys, higher high, higher low formation. This is all trendline or retail trading trendline. I said to you guys on Twitter on March 26th, trendline liquidity grab, then popcorn. Okay, look at the accuracy. The market makers push, grabbed some trendline liquidity beneath these lows, psyching people out, creating retail resistance areas or regions here where you can imagine, right? People were selling from these highs here, here, here in the form of retail resistance, or maybe even some type of triple top formation. Okay, now they were also buying from these lows, buying from these lows, buying from these lows, buying from these lows and these lows. Before the market makers can send price higher, they always need to grab some form of liquidity. Well, if you guys had been paying attention to this tweet and what it is that I teach you guys on the YouTube, you guys could have dollar cost averaged into XRP and caught this move all the way up to about 91 cents. All right, almost even 92 cents. All right, absolutely beautiful price action. Again, you guys can follow me on Twitter if you want, where I'm going to start, analyzing the charts and taking my screenshots of my technical analysis on some cryptocurrencies that I do cover on this YouTube channel. Okay. But so anyways, now to get into how to dollar cost average onto HBAR, I uploaded this video on March 24th, as you guys can see here. Let's go over to HBAR, okay, and see how many opportunities there were utilizing the strategy that I teach on this YouTube channel and in the CYPRX Advanced Mentorship for you guys to capitalize on some gains since I released that video. Okay, so here is where I released that video. As you guys can see, the technical analysis has not changed, where I told you guys I was dollar cost averaging into HBAR right here on this pullback. My position is still technically floating if this was a leveraged account. However, I entered this on my uphold account. All right, but right here in this area, okay, let me go to, let's just say the 30-minute chart, just to give you guys a clearer perspective. Okay, here in this area, we can see, let me elongate the charts for you guys so we can get rid of all that access jazz. Okay, here we can see there were not one, not two, but 4 examples on how you guys could have used the strategy that I teach to dollar cost average into HBAR all the way up to about 25.5 cents. Okay, so you guys can see here, this move, had you have utilized the strategy properly, which I'm going to go into extreme detail here in just 1 second on how you could have done that, would have returned 14% on your overall capital, okay, on however much you were dollar cost averaging into HBAR at that point in time, utilizing the strategy and the methodologies that we teach. Here's another move that would have capitalized 12% on your overall portfolio. Here's another move. This is now the third New York session where you guys could have utilized the strategy that we teach and you could have capitalized on 9%. Here, another 8% move during a New York session utilizing the methodologies that we teach. So now I'm going to go into the lower time frame price action for all of those individuals who are interested in learning the strategy and what it is that we teach here on the YouTube. Again, smash that like button. It does help boost the YouTube algorithm, and make sure that you're subscribed to the YouTube channel. Okay. Now, in the last video that I uploaded on March 24th, I had mentioned to you guys that you can dollar cost average into HBAR utilizing this strategy, utilizing the methodologies that we teach. So let's just go over the first example, which was right here, okay? Right here on HBAR, after I had released that video on March 24th, the following day, we had a beautiful run on HBAR utilizing the methodologies that we teach. This would have been a 14% gain on your overall capital had you have paid attention to price action and what it is that we teach here on the YouTube channel, okay? So let's start at the 10-minute chart, okay? And then we'll jump down to the lower price action after we've analyzed everything that has happened prior to this New York session. So prior to this New York session, we know that we would have had all of this price action information. For those individuals who say that hindsight testing is crap, it is not crap. Because why? We would have had, if we were trading this New York session to the right-hand side in this region, we would have had all of this price information to analyze to give us an edge in the market. Well, just based off of some simple principles that I teach you guys on the YouTube channel, what can we see here? What can we see coming into this New York session? Well, we can see a couple of different things. We can see that the previous New York session purchased from this area or this general region down here at a low, okay? We can also see that Asia session purchased from down here at a low, and London session purchased from a low as well. They manipulated price to send it lower, to then take buy positions and send it higher to liquidate any people who sold retail resistance or had buy stops that wanted to be triggered or activated above these highs prior to London session, okay? Again, showing improving manipulation exists in the market prior to every single session. Now we are in what? We are in New York session, or we're coming and heading into New York session. So let's play price action out. Boom, New York session. What can we see here? We can see that what? New York session purchased from lows in this region. We can see that Asia session purchased lows in this region. Then we can also see that London session purchased from lows in this region, okay? So we know, operating at a high, that the bank and institutions most likely are not going to be purchasing at a high. Why? Because we follow the buy low, sell high methodology, which is what the bank and institutions generally tend to do. They are not looking to buy price at a high or a premium. They're looking to buy price at a discount. So right now we can clearly see that we are operating at a premium range. So the bank and institutions most likely are not inclined to buy at this region. What are they most likely doing? They are setting up retail resistance or a trap in the form of retail traders who like to sell resistance methodologies or like to sell order block methodologies, right? There's an order block here in this general area. You can imagine that over leveraged sell positions are being placed from above these highs. What else exists above these highs? Buy stops from people who are willing to buy the market once price surpasses these levels, okay? So we have two forms of liquidity, which I've mentioned to you guys on this YouTube channel before, that rests above these highs. So now we know three different things. We know that the market makers previous to this New York session purchased from lows here, here, and here. We also know that we are currently operating at a high. We also know that the market makers currently are setting up two retail trading traps in the form of what? Retail resistance, buy stops, okay? And then also what? Trend line liquidity in this area where we can see a touch from this trend line, a touch from this trend line, and potentially maybe another little tiny minor touch from this trend line, okay? We can imagine that there's now liquidity that exists beneath these lows that the market's going to want to grab if it is going to send price higher to attack what? Other areas of liquidity above these highs, okay? You have to be able to identify the market in this way. We've identified that we're operating at a high. The market makers most likely, if they're going to buy, are not going to buy from a high. We've identified that the market makers previous to this New York session purchased from lows, which is where what? This current New York session's market makers are most likely inclined to manipulate price down into discount to then purchase price at a lower area. Okay, you guys can see how it's all playing out right now. It's just logic in the market. So if you were at my trading floor and we were about to execute a potential trade in this area, what I would say to do is I would say, because we have a new market structure high, we've operated at a new market structure higher low previous to the other market structure higher low, where we can see higher high, higher low, higher high formation. We are most likely operating inside of a new A to B move or a uptrending market. Okay, where we can see consecutively the market makers are doing what? They're sending price lower, to take price higher and liquidate sellers and buy stops. Same thing. They're taking price lower to send price higher. They're taking price lower to send price higher. We are in a bullish environment. Okay, so if you were operating at the trading floor, I would say to you right now, we are operating at a high. We have discounted regions. We can see that the market overall on the higher time frame is bullish. It's creating bullish order flow where the market makers are manipulating price prior to every single session to take firm buy positions. Okay, now knowing all of that information coming into this New York session, which we would have had you have been trading, which is why hindsight testing works. Okay. What I would have said to you is now let's jump down to the lower time frame and see if we can see any form of manipulation where we can see the market makers enticing people to sell, but we know that they are forcing price action down into discounted regions where the bank and institutions purchased from the previous day to add to their overall orders, most likely if we are in an uptrending environment. Okay, so now from the 10-minute chart, let's go down to the 5-minute, see if we can see any forms of manipulation. Yes, we can. How? Utilizing our manipulation window. We see 8:30 a.m. or collectively speaking, because my charts are set to Los Angeles time, that's 5:30 in the morning, but we see Eastern Standard Time would be 8:30 a.m. And we'll take that to 3 a.m., which would be 6 a.m. Eastern Standard Time, and we'll change this to the manipulation box. Okay? So now, what all do we have? What all do we have? We see sellers above these highs. We see trendline buyers beneath these lows. It is so simplistic. So what do? We can identify some psychological levels in these discounted ranges. So maybe the 22-cent region or maybe the 21.5-cent region down here at these lows. If we see any type of bearish push or bearish manipulation into these lows that fails to take out previous higher lows or this general region, so we can go ahead and we can identify this region, we would need to, logically speaking, break this low. Okay, we would need to break this low to confirm bearish price action. So we'll go ahead and we'll mention this as a discounted price region. Okay, so can we get bearish manipulation to entice people to sell and chase bearish candlesticks? But we know the banking institutions are manipulating price to push it into discounted ranges to then take price higher. So we will act or react to price action if we see a reversal off of a psychological level and bullish momentum pick up or break the previous market structure, where we will look to enter into buy positions, either at the break of the previous market structure or a significant pullback in a higher low formation. All right, so this is the pattern that we're looking for. And let's watch how price action plays out. Okay, so we see the bearish manipulation. They're now pushing price action down into the lows. And what do we get right here in this region? Look at this accuracy, you guys. We see the bearish manipulation play out. We have a discounted region labeled via the higher time frame analysis. We understand manipulation in this range where we could see that what? The banking institutions were setting up early buy positions and sell stops beneath these lows. Look what the market makers did. They liquidated people that sold early prior to the session in this range. They dropped price down to liquidate early buyers and activate sell stops. And they did what? They respected discounted price. They rejected a psychological level, the 22-cent range to the T. I'll go ahead and put that on for you guys. Okay, the 22 psychological level to the T of a degree. They rejected it, bullish momentum, and what do we get? Zooming into this fractal price action right here, what can we see? A bullish rejection of a psychological level in a discounted range that breaks previous market structure highs. This is a bullish reversal. You could have dollar cost averaged into Hedera hash graph and made 14%, paying attention to what it is that I teach you on the CYPRX YouTube channel, entering here for buy positions. You're not entering at a high, you're entering after a bullish reaction low. Okay, and you're looking to send price higher. You're dollar cost averaging into HBAR properly. And look what this would have done for your portfolio. Okay, again, not investing advice. If you guys are interested in learning this technical analysis process, I teach it to the CYPRX Advanced students in extreme detail. Okay, absolutely beautiful. Dollar cost average position into HBAR would have returned 14% on your initial entry. Absolutely outstanding, easy to read price action, understanding logic in the market, understanding what the banking institutions are doing, not trading order block methodology or any of that, just crap, okay? It's just straight logic in the market. What are the banking institutions most likely inclined to do? Why are they doing it? And what are they doing it for? And it is to liquidate retail money in the market from people who are less informed. It's that simple, okay? There's two types of traders in this market. There's people that are less informed and there's people that are more informed than you. All right, so here is where we were talking about the entry in this YouTube video on March 24th. On HBAR, all right, absolutely amazing gains on the overall portfolio. Had you guys wanted to utilize the methodology, go back test during every single New York session, how you could have avoided manipulation. You could have waited for a fractal break of structure. You could have waited for a psychological level rejection in a discounted range, and you could have dollar cost averaged into HBAR all the way up to around 25.5 cents, where we're currently floating at now. All right, blessings to you guys all. I hope that you enjoyed this video breakdown. Make sure that you follow me on Twitter if you guys want to. See Domenicore. As always, take it easy, be cognizant, be aware, and I'll see you guys in the next video breakdown.